Transfer pricing, that we kind of mentioned it in our introduction, but here is where we're going to really dive into it more. A lot of this will be overlap, so if you are familiar with what transfer pricing is, feel free to move on to the next clip. But transfer pricing refers to the pricing of transactions between related parties such as subsidiaries or affiliates within a multinational corporation. These transactions, they are going to include goods, services, intangible assets, or loans. And transfer pricing is relevant for tax purposes because it determines the allocation of profits and taxable income among the related parties across different tax jurisdictions. Tax authorities, and on there, and rightly so, are concerned about tax transfer pricing because it can be used to manipulate taxable income, leading to tax avoidance by setting artificially high or low prices for intra-group transactions. So transactions between those subsidiaries, multinational corporations can shift profits to low tax jurisdictions and expenses to high tax jurisdictions and reduce their overall tax liability. Like I said, this was going to be a lot of repeat from what we saw in the introduction. So if this is something you're familiar with, feel free to move along. But just to reiterate what we saw, make sure you know it. Transfer pricing issues arise when a U.S.-based taxpayer shares costs with an affiliate that is either not subject to U.S. income tax or does not file a consolidated income tax return with the U.S.-based taxpayer. If you do a lot of your operations in a lower tax jurisdiction, a lower tax country, that's where we could be seeing this. In such cases, the allocation of costs and income between the entities may not be aligned with the true economic value of their contributions, which can lead to tax authorities questioning the fairness of the transfer pricing arrangements. We see, from their perspective, makes sense. Makes sense they want to monitor this, regulate it, and watch out to try to capture as much of that income as possible. Let's run through an example here of transfer pricing. And an important note here I have that this example here is to paint a picture of how transfer pricing works. You're not going to need to do anything like this on the exam. This is just really giving numbers to what I was talking about on the prior slides. You don't actually have to do this. But so if you don't want to go through this, feel free to skip. This is just here if you want to understand how transfer pricing works using numbers, using an example such as this. Now consider a multinational corporation, which is company A, and that has two subsidiaries. It's got subsidiary X in the United States, where the corporate tax rate is 25%, and subsidiary Y in country B, where the corporate tax rate is 10%. So massive difference there. We see that B has a much lower tax rate, which is nice there. Subsidiary X manufactures electronic components and then sells them to subsidiary Y, which assembles and sells the finished product. So you can see how we're trying to possibly manipulate here. We have a lot of the costs in the higher tax jurisdiction and a lot of the profits in the lower tax jurisdiction. Now, let's assume that subsidiary X incurs $100 in manufacturing costs to produce 10 electronic components, and the fair market price, which is the arm's length price, this is the non-related party price, of each component is $20. Now, under normal circumstances, the intra-group transaction should be conducted at this price, which would total $200 for the 10 components. However, to take advantage of the lower tax rate in country B, company A decides to manipulate the transfer price. That's not good. What are they going to do? Well, we have this transaction here. Subsidiary X, which is in the US, their sales revenue, that's going to be the $20 times the 10 components for $200. Their total manufacturing cost is $100, and as such, we have profit of $100. Our tax liability is going to be 25%. That is going to be $100 times 25% to give us $25. Now, what about subsidiary Y in country B? We're going to have a cost. They bought it for $200 because, well, we sold it, right? We see that that's where that amount comes from. We've got assembly and other costs of $50. Our sales revenue, which comes from the final product, is $400. And what's our profit? We see that our profit is $400 minus the total cost of $200 plus $50, which gives us profit of $150. And lastly, our total tax liability is going to be 10% of that $150, giving us $15. Now, what's going on here, and why is our total tax liability $25? What about this? Well, because the IRS is coming in and saying, hey, this is what your tax liability should be. You're going to pay more on taxes because we're paying it on that 25 as compared to dealing with the 15. We see this is what happened, and the IRS looks at the transaction, says, yeah, no, you're paying the tax on the higher amount. In reality, what happened, because whether you intended to or not, maybe you just decided to open up a factory in country B. There's no reason it would be illegal, and there's no reason this would give you penalties. It's just you need to identify this topic of transfer pricing and pay the correct amount of tax.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.